Hello, good evening, everyone. Risha, Janab, please confirm if I'm audible to both of you or not. All right. Okay, so both of you, Vanisha and Janab, in the previous session, we were discussing about depreciation, right? So let's just first of all recall everything before moving forward in this topic. So at the beginning of this topic, we talked about the meaning of the depreciation, wherein I told you that depreciation is basically reduction in the value of tangible asset because of the passage of time, usage of the asset, because of the asset gets outdated or due to the accident that have occurred that lead to the reduction in the value of the asset. Then I told you that depreciation is something which is permanent. We just cannot ignore and avoid depreciation. It is a continuous process and it is a permanent thing that we cannot avoid. And I told you that in order to determine the value of depreciation, we need to have at least three information about the asset, including the life of the asset, cost of asset, salvage value of the or the scrap value of the asset. Okay, so I'm assuming that all of these things are already clear to you. And after that, we did the various method by which depreciation can be calculated. As far as labels, we need to cover two method, which include straight line method and the written down value method, right? And currently, we were discussing about the straight line method. On the basis of that, I guess we already did 3-4 questions based on the straight line method, right? Now, everyone. And I think I have given you one question for the homework as well. I'm not sure whether you have done it or not. Please confirm if you have solved that question. I think this is the question that I gave you for the homework. Zainab and Rita. Zainab, please confirm whether you did this question or not. Zainab, please respond. Otherwise, I'll have to remove you from the session. I don't know why it's remain muted throughout the session. Please participate, get involved, and answer my questions.
Okay.
Zainab?
Help to solve this question. I was not able to solve it.
All right, Vanisha, that's not a problem. I'll be solving this question for you. But I'm just waiting for the confirmation from Zainab. Zainab, you did this question or not? All right, as usual, she is not responding. If you have any problem with your mic, you can also tell me in the chat section, Zainab. All right, Vanisha. So start writing the solution of this question. I'm explaining this question and solving this question for you. See, as the question says, let me read this question for you. It says a van was purchased on 1st of April 2016 for rupees 60,000 and 5,000 was spent on its repair and registration. So that means a van has been purchased on 1st of April 2016 and 5,000 is spent on its repair. That means the total cost of van will be considered as 65,000. All right. Then on 1st of October 2017, that means in the next year, another van was purchased for 70,000 on 1st of April 2018. The first van purchased on 1st of April 2016 was sold for 45,000, and a new van costing 1,70,000 was purchased on the same date. Show the van account from 2016 to 2018-19. On the basis of straight line method, the rate of depreciation is 10% per annum. Assume that book are closed as on 31st of March every year. All right, the question is not that difficult. Let me solve this anyway for you. So, Manisha, in this question, which account are we required to prepare? Which account is required? Tell me. Van account. And try to speak a little louder because you're not audible. Your voice is coming very feeble.
Sir, I'm sorry, I'm not well today. I'm so
Okay. It's okay. Okay, so first of all, we'll make van account for the year 2016-17. Yeah, question requires us to prepare the van account for the year. It's starting from 2016-17 till 2018-19. So let's prepare for the 2016-17 post. So that means we will be recording transaction in this account occurring between 1st of April to 31st of March. All right. So first of all, first thing that is given in the question, it says on 1st of April 2016, 60,000 van was purchased for rupees 60,000 and 5,000 was spent on its repair. So that means we'll write this as 1st of April 2016 to bank. We purchase a machine, we purchase a van costing 60,000. Or in fact, I should consider the total value of the van as 65,000 because cost of repair and registration will form part of the cost of van. All right. I guess it is clear to you. Is it clear to you, Manisha? Please confirm if this is clear. Yes or no? I'm not able to hear you. Could you please tell me whether this is clear or not, Manisha? Labiba?
Can you explain once more?
Okay. So Labiba, since you're joining late, Labiba, we are solving the question that I gave you for the homework. Since Manisha is saying that she's having some problem with the question, with solving this question. So I've decided to solve this question for you. So this question requires us to prepare the van account for the year starting from the year 2016-17 till the year 2019. All right, so I am just preparing the van account for the year 2016-17. All right, and in this account, we will first of all record the first transaction on which the first van was purchased. So it says in the question that on 1st of April 2016, a van was purchased having a value of 60,000 and upon which a repairing cost has been incurred of rupees 5,000. That means the total cost of machine, total cost of van will be 60 plus 5,000. That means 65,000. Is that clear to you?
Yes, sir. Yes, sir.
Okay. Then on 1st of April, on 1st of October 2017, another van was purchased for rupees 70,000. Now, on 1st of October 2017. That means it is regarding the next financial year. That means from 1st of April till 31st of March, no other transaction took place. The next transaction that is given in the question taking place on 2017-18. Alright, so this particular transaction need not to be recorded in this particular account. In the year 2016-17, they only purchase a van. No other transaction is given in the question. Do you understand that? So ultimately, in this question, we will just calculate the depreciation. So as on 31st of March, guys, if you are having any problem understanding anything, please tell me so that I can make it more understandable for you. As on 31st of March, we will simply calculate depreciation on the van that we have purchased at the beginning of the year. So I'll write down by depreciation. And rate of depreciation is already given in the question. This is on 65,000, we will charge depreciation at 10% per annum. We will be charging depreciation at the rate 10% per annum for the entire year. Is that right? We'll be charging depreciation on the 65,000 for the entire year. So depreciation calculated at the rate of 10% on 65,000 will be how much? This will be 6,500. Is that right? Is that correct, everyone? Okay. Now, since we got the value of the depreciation, now we can simply calculate the closing value of the closing figure that will be written as on 31st of March 2017 by balance CD. Any one of you can please tell me what will be the closing balance of this year? It will be value of the machine was at the beginning of the year was 65,000. Is that right? Out of this, we need to subtract 6,500. So subtracting 6,500 out of 65,000, we'll be getting how much? Tell me. It will be 65,000 minus 6,500. This will be 58,500. 58,500. Is that correct? All of you, is it correct? Is it clear, yes or no?
Yes, sir.
Okay. And now we will close this account for the year 2016-17. And we'll write this as sum total should be 65,000 on both the sides. All right. So this is the van account for the year 2016-17. And similarly, we'll have to prepare another account for the year 17-18. All right. So let's make another account for the year 17-18. For that purpose, we'll have to make a separate ledger, van account. For the year 2017-18. Date, particulars, amount, date, particular, and amount. All right. The first thing that we need to do in this account is transfer the closing balance of the previous year. We'll transfer this closing balance as the opening balance of the next year. All right. So let me write this as we'll be transferring this as on 1st of April next year. Our opening balance for the van account will be as on 1st of April 2017. We'll write this as to balance to balance VD will be 58,500. All right, I hope this is clear. Everybody, is this clear? Yes or no?
Yes.
Okay. Now let's get back to the question. Let's find out what took place, what transaction took place in the year 2017-18. So you can read the second line. It says on 1st of April 2017, another van was purchased for rupees 70,000. All right, I hope this is clear. So this transaction needs to be recorded like this. On 1st of October, we bought a new van. So on 1st of October 2017 to bank, we bought van number 2 for rupees 70,000. All right, I hope this is clear. Please confirm if this is clear. Please confirm if this is clear. Okay. Then it says on 1st of April 2018, the first van purchased on 1st April 2016 was also being sold at rupees 45,000, and a new van costing 1,70,000 was purchased on the same date. That means on 1st of April, we got one more van. 1st of April 2018, we bought one more new van, that is van number 3 for rupees 1st of April. A new van is being purchased. So we'll write this as to bank on the debit side of the van account for rupees 1,70,000. All right. And on the same day, an old van that has been purchased on 1st of April 2016 was being sold as well. Right? So on 1st of April 2018, we are selling one old van. That means we'll write this as by bank. For how much we are selling the new old van? We are selling that for rupees 45,000. All right, is that clear? Is that clear?
Yes, sir.
Now the thing is that the first van which is being sold for rupees 45,000, do you know that is its written down value? That means its current value is 58,500. Its current value is 58,500, and we are selling it for rupees 45,000. What do you think? There is a profit or a loss situation? What do you think? There is a profit or a loss? Van having a value of 58,500 being sold at rupees 45,000. What do you think? Is there a profit or a loss? Let me repeat my question one more time. I'm saying first van that was purchased on 1st of April, whose written down value, whose current value as on 1st of April 2017 is 58,500, is being sold for rupees 45,000. So what do you think? Is there is going to be a profit or loss?
Loss.
Yes, there will be loss. But what is the value of the loss? So in order to calculate the exact value of the loss, we will have to first of all calculate depreciation on machine on band 1 till the 1st of April 2018. So we'll calculate depreciation. See, we'll calculate depreciation since this machine is being sold on 1st of I have made some mistakes. All right, so just a minute. See, this 1st of April, the old van is being sold on 1st of April 2018. That means this is not related. This transaction is not related to the current year. This is regarding the next year. So we won't be writing this. We won't be entering this transaction here. I'm sorry. We cannot write this here. Neither we will be writing this. We cannot record this here. Why we are not recording it here? Because this account is being prepared for starting from 1st April till 2017 till 31st of March 2018. Whatever have happened within this period, we will be able to record that transaction in this account. Like this transaction have occurred within this period, right? Nah? This transaction have occurred on 1st of April 2007, 1st of October 2017. So therefore, we can record this. This transaction occurring after this, like it says in the question that on 1st of April, we have bought a new van and sold an old van. That cannot be recorded in this particular ledger. That will be recorded in the next year's ledger. All right. I hope this point is clear, everybody.
Yes, sir.
I'm really sorry that I entered that transaction here. All right. Skipping that. Now let's calculate the depreciation. We have an old machine. We bought a new machine. We will be calculating depreciation on old, not machine, van. We will be calculating depreciation on old van for the entire year, and we will be calculating depreciation on the new van for the period for which it is being held in this particular financial year. Let's calculate depreciation as on 31st of March 2018. We'll write by depreciation. First of all, we will calculate depreciation on van 1, which is an old van first. And on that van, depreciation will be calculated, as you know, by straight line method. So depreciation will be same. Like in this year, depreciation was 6,500, na? So it will be same in the next year as well, 6,500. So on van 1, depreciation will be 6,500. And on van 2, we will be calculating depreciation for the period for which it is held in this particular year. So we will calculate depreciation on that. That will be, let me show the calculation, 65,000 into 10% for the entire year, 12 upon 12. Similarly, we will calculate depreciation on van 2. That will be 70,000. Rate of depreciation is how much? It is 10% per annum. Is that right? Is that right? Now anyone please tell me for how many months we will be charging depreciation on van 2? For how many months we will be calculating depreciation van 2? We bought this van on 1st of October and we will calculate depreciation until March. So how many months are there? Starting from October till March, how many months are there? Please tell me. Labiba, Zainab, Vanisha, starting from 1st of October till 31st of March, how many months are there?
5.
5 months. No. October, 1 month. Then November, December, January, February, until 31st March. The entire month of March will also be calculated now. So 1, 2, 3, 4, 5, 6. 6 months are there. So we will calculate depreciation on van number 2 for 6-month period. All right, because it was held for a period of 6 months in this year. So that will be 6 upon 12. I hope this is clear. So 70,000 into 10% is 7,000. 7,000 into 6 by 12 will be 3,500. So that is total depreciation. All right, now we will find out the closing value of both the vans on 31st of March 2018 by balance CD. By balance CD will be for van 1, balance CD will be 58,000 58,500 was the opening value of the van 1, subtracting depreciation out of it. Similarly, for van 2 was purchased in this current year for rupees 70,000. We'll subtract the amount of depreciation, which is 3,500 upon it. After subtracting this, we will get, let me calculate that, 58,500 minus 6,500, this will be 52,000. All right, similarly, 70,000 minus 3,500, that will be 66,500. All right, this is the closing balance of both the vans in the current year. Now, as usual, we will find out the closing balance. We will find out the balancing balance. So this will be 70,000 plus 58,500, 1,28,500. All right, is this clear? Laviba, Zainab, Anisha. Please confirm if this is clear, yes or no. Labiba, Zainab, Anisha, I need your confirmation. Please confirm if this is clear, yes or no. Labiba, Zainab, and Manisha, I think you guys should keep your cameras on, because most of the time you don't respond.
So I'm saying yes. Am I not audible?
Yeah, now you're audible, Labiba.
So I even said
And
before.
keep asking if you have any doubt. Keep asking your doubts. All right, and keep on responding. Whenever I ask question, you should respond on that immediately. Okay, so this is 2000 van account for 2017-18. Question requires us to prepare the account in the year 2018-19. We will have to make one more ledger for the year 2018-19. Let's make one more account, van account for the year 2018-19. Okay, so the closing balance of the previous year will become the opening balance of the next year as earlier. So we'll write on 1st of April 2018, opening balance will be balance BD. For van 1, it is 52,000. For van 2, it is 66,500. Totaling this, we will be getting 52,000 plus 66,500, which will be 118,500. Okay. Now question further says that we have bought a new machinery as on 1st of April and sold an old machinery for rupees 45,000. Okay, so let's first of all enter the value of the new machine that we have bought, and on 1st of April 2018 a new machinery has been bought. So we'll write this as to bank. Value of the new machine, new van was 1,70,000. So this is van number 3. This is B3. All right. And on the same date, that means on 1st of April 2018, we have sold an old machine as well. So we sold the old machine, not old machine, old van for rupees 45,000, right? So we'll write 45,000 here, and this is for van number 3 that we have sold. But we also need to calculate depreciation on this particular van till 1st of April. What will be the depreciation? There will be no depreciation calculated because it is sold at the very first day of the year. So no depreciation will be required to calculate in this question, in this situation. All right, but obviously the van that has been sold, the written down value of that van is 52,000, right? The written down value of the van one is 52,000 and it is being sold at rupees 45,000. Now tell me, if a van having a value of 52,000 is sold in the market at a value of 45,000, what do you think? There is a profit or a loss? Tell me.
Sir, it is a loss.
It is a loss, obviously. So there is a loss of how much? 7,000. All right. So we need to write the loss as well, along with the realizable value of the not van, this word van one, sorry. Along with the realizable value of van first, the old van, we need to write down the profit or loss generated on sale of the old van.
So,
Yes.
so could you explain once again why did we write the value of depreciation?
Why didn't we write depreciation? See, this is the opening value. Opening value of the van one is given as on 1st of April 2018, right? And on the same day, we have sold the van. That means it is kept in the year 2018-19 for 0 day. That means opening balance is given for 1st of April, which is 52,000, and date of sale is also 1st of April, for rupees 45,000. So is there any requirement to calculate depreciation? Answer is no. If we are selling the old van on the opening day of the accounting year, on the first day of the financial year, that means no need to charge depreciation. But let's suppose, for example, if this van was sold on 1st of January, sorry, 1st of June. Let's suppose if this van would have been sold on 1st of June. In that situation, we will have to calculate depreciation for April, May, and June for 2 months, for the month of April as well as for the month of May. But since we have decided to sell this van on the first working day, there is no required to charge depreciation because it is sold on the first working day of the financial year. I hope this is clear to you.
So one more thing, what if it was like 2nd April?
In that case, we will be charging depreciation for 1 day.
Okay, so we'll be
In that
charging.
case, the depreciation will be calculated like this: 52,000. We will calculate depreciation 52,000 at the rate of 10% per annum for 1 day. That will be 1 upon 365 days. You understand that? We will have to charge depreciation for 1 day. But in this question, we are selling the machinery on the same day, on the opening day of the accounting year. Therefore, no need to charge depreciation. Okay, moving on to the finally, let's close the account. Let's find out the closing balance of the year 2018-19. We'll write 31st of March. This year will end on 2019. But before finding out the closing balance, we will have to charge depreciation on the remaining machine, on the remaining van. We will charge by depreciation on the remaining vans. We sold one van now. Two vans are still there. We will have to calculate depreciation on remaining van. How many vans will be left? Van number 2 will be there, and van 3 will also be there. Alright. And since this is a straight line method, so on van 2, we will be charging depreciation on the purchase value. Van number 2 was purchased at 70,000, and at the rate 10% will calculate depreciation for the entire year. 70,000 into 10% into 12 by 12. So that will give you 7,000 as the depreciation of the entire year on van 2. Similarly, you will calculate depreciation on van number 3 that was purchased on 1,70,000, and on this we will calculate depreciation for the entire year as well, because this van was also purchased on 1st of April. That means we will charge depreciation starting from 1st of April till 31st of March. So starting from 1st of April till 31st of March, there are 12 months. So we'll calculate the depreciation for the entire year. 1,70,000 into 10% into 12 by 12, that means 17,000. All right, is that clear? Manisha, Labiba, Zainab,
Yes, sir.
is that clear? Okay, now we will close this account as on 31st of March. We'll figure out the closing value, closing balance of the remaining machinery. So we'll write this as by balance CD. Only two machines will be left. Van number 2, van number 3 will be left, and their closing value will be van at the beginning of the year. Van 2 was of 66,500, and on this we charge a depreciation of 7,000. So that means new value or the closing value of van number 2 will be 66,500 minus 7,000. All right, subtracting 7,000 out of 66,500, we will be getting 59,500. All right, and similarly for van number 3, that is 1,70,000, we'll subtract 17,000 of depreciation. So 1,70,000 minus 17,000, new value will be 1,53,000. And now we will close this account and we will be done with the question. So closing this account, we need to add 1,18,500 and 1,70,000. 1,18,500 plus 1,70,000. Total of this will be what? 2,88,500. 2,88,500. Please confirm if this is clear. This question is clear, yes or no? Done. If this is clear, please confirm. Labiba, Zainab, Vanisha, any
Yes,
doubts?
sir.
It's clear.
You guys are still writing it, or you are done?
Yeah, I'm done.
Okay, Labiba is done. Vanisha, please confirm whether you are still writing it or you are done.
So,
Okay.
yes, sir.
Got it. Okay, so this was the question I gave you for the homework. Anyways, let's move to the next question. All right, so this is a new question that we need to discuss. In this question also, we need to calculate depreciation by the SLM method. It says from the following transaction of a concern, prepare the machinery account for the year ended 31st of March 2009. All right, so we need to prepare the machinery account for only 1 year, that is 2018-19. It says on 1st of April 2018, purchase a second-hand machinery for 1 lakh. It spent 2 lakh on repair for making it serviceable. On 30th September 2018, purchase additional new machinery for 60,000. And on 31st of December 2018, repair and renewal of machinery 20,000. 31st of March 2019, depreciate the machinery at 10% per annum. What do you think, everyone? Do you think you will be able to solve this question? Shall I give you 5-10 minutes to try this question? Or if you please confirm. Do you want to try this question? Labiba, Zainab, Anisha.
Yes, sir.
Okay, just give it a try. I'm giving you 10 minutes. Start, prepare machinery account for this question. You need to prepare the machinery account for 1 year only. That is 2018-19. Labiba, will you be comfortable solving this?
Yes, sir.
Okay, just give it a try. If you face any difficulty, anything, if you find anything problematic, then let me know. I'll help you out. See everybody, in this question, we are required to prepare machinery account for the year 2018-19. And this question says that on 1st of April 2018, purchase a second-hand machinery for rupees 1 lakh. and it spent 20,000 on its repair of it, for making it serviceable. See, I've told you that any amount is spent on any machine until it is serviceable, or until the installation, all form part of the cost of machine. So in this case, even though machine was purchased for rupees 1 lakh, but the repairing cost that has been incurred of rupees 20,000, that will be part of the cost of machine. So that means on 1st of April, we will, in the machinery account, will write down on the debit side to bank, value of the machine that we bought is 1 lakh, and the amount spent on this machine to make it serviceable is 10,000. That means total cost of machine is actually 1,10,000. Okay, then on 30th of September 2018, we bought additional machinery for 60,000. So we'll write this as on 30th of September. 30th of September in the same year, 2018, we bought a new machine. You can name it M1, and new machine that we bought can be called M2. We have bought this for rupees 60,000. All right, and then it says we have on 31st of December 2019, repair and renewal for machinery 20,000 has been also incurred. So that will be considered as a revenue expenditure, and that will be written as on the debit side. We'll write this as on 31st of December 2018, we have spent it will be written as plant and machine to profit and loss account. This is repairs and expenditure. Repair and maintenance. This time, the amount spent on repair and maintenance cannot be charged to cost of machine, because this is a revenue expenditure not incurred to make the machine serviceable. If this 20,000 has been incurred to make the machine serviceable, in that case, it would have been form part of the cost of the new machine. But since this is incurred on 31st of December, this is a regular expense, as a routine revenue expenditure, we will be writing this as to profit and loss account on the debit side of the machinery account, and write down the amount 20,000 here. Okay. Then it says that we need to charge depreciation at the rate of 10% per annum. So let's do that. Let's calculate depreciation. So we'll go to the credit side of the machinery account and write down on 31st of March 2019, depreciation will be by depreciation. We'll calculate depreciation on machine 1 for the entire year. That means 1,10,000 into 10%. Since the machine was bought on 1st of April, so therefore we will have to calculate the depreciation for all 12 months. 12 upon 12. That will be 11,000. And on M2, since we bought this machine in the month of September, 30th September. So we'll count the number of months starting from October 30th September till 31st of March. So counting from 31st of September till 31st of March, it will be how many months? October, November, December, January, February, March. 6 months. We will calculate depreciation on this machine too for 6 month period only. 6 by 12. This will be 3,000. And then we will find out the closing balance. As on 31st of March 2019, by closing by balance CD. By balance CD will be how much? For machine 1, for machine 2. Balance CD will be 1,10,000 minus depreciation on machine 1, which was 11,000. Similarly, 60,000. Depreciation on machine 2 is 3,000. All right, so calculating this, we will be getting 1,10,000 minus 11,000, 99,000, and 60,000 minus 3,000 will be 57,000. All right, is that clear? Okay, just a minute. Just a moment. The amount is spent on plant and machinery as a repair and expenditure, because it is, this need not to be recorded in the plant and machinery, guys. Please delete this. Please erase this. Strike it out, because this is not related to machine. This is obviously related to machine, but it is a revenue expenditure. So we will record that separately in the profit and loss account. We need not to show that in the machinery account. Revenue expenditure, or the amount incurred as a amount incurred on repair and maintenance of the machine, does not increases the cost of machine. Therefore, we want to record that in the machinery account. Now, without considering that, we will total the debit and credit side of the account, and make sure you are getting the same balance. 1,10,000 plus 60,000, which will be 1,70,000, and 1,70,000 on the other side. Alright, please confirm if this is clear, yes or no? Zainab, Labiba, Vanisha.
Yes, sir, it's clear.
It's clear now. So what I'm trying to explain to all of you through this question is that any expenditure incurred after the installation of the machine, any amount incurred as a repair and maintenance after the installation of the machine, cannot be considered as part of the cost of machine. That is our revenue expenditure that will be recorded in the profit and loss account. And since right now we are not preparing the P&L account, we are just preparing the machine account. Therefore, any amount spent on the machine as a revenue expenditure or as by way of repair and maintenance need not be shown in the machinery account. I hope this is clear. I hope all of you must have written this down. Dalabiba and Dana Vanisha. Please confirm if you have written this down.
Yes, sir.
All right, so guys, we are done with this question, and I'm giving you one question for the homework. Please take the screenshot of this question. This question is also required to be done by applying the straight line method. And make sure you revise the concept on a regular basis. Otherwise, this is going to be a difficult chapter. Depreciation is one of the difficult chapter of our syllabus if you don't revise it on a regular basis. All right, you will be facing difficulty solving this question, solving the question of this chapter, if you don't dedicate some time to this chapter. Done with the screenshot, all of you? Done, everyone, with the screenshot?
Yes, sir.
Yes, sir.
Okay, let me check if I have any other question that I can give you for the homework. I think you will be able to solve this question as well. Kindly take the screenshot of this as well. 2 questions for you as a homework. Take the screenshot quickly. Done, na? So this is it. This is it for today's session. I would recommend that you revise the concept, and especially the question that you solved. Try solving this question on your own one more time in a rough notebook. That will give you some confidence in the chapter. All right. So this is it for today's session. We'll see you in the next class with a new method. Probably we'll be discussing about